The cryptocurrency market, Bitcoin, and the altcoin market are all currently retesting a multi-month downtrend. In today's video, we are going to be discussing this major retest across three different charts, the consequence of both a break of this trend line and a failure to do so. We're going to be diving deep into both the macro and the short-term charts, leaving absolutely no stone unturned. By the end of today's video, you'll have a detailed and well-rounded understanding of both Bitcoin's price action, the total market cap, and the altcoin market. Now, before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in VIP. To join the VIP channel, click the pinned comment of the free Telegram channel, contact our admin, check out a 50+ month trading track record, or a 10-minute video showing you inside the channel. You'll get access to two main channels. The first one that provides trading setups with exact entries, targets, stop losses, trade justification, exclusive analysis, and so much more, including access to a group chat with our general chat, our trading chart and education chat, our daily video, help, news, and trade setup chat. Again, over 700 members. We've been operating for 50+ months. We'll love to see you in there. Go ahead and check it out. Let's dive into the content. So taking a look at the last 24 hours of price action, we haven't seen all that much movement for Bitcoin. Bitcoin having broken down from a pretty important uptrend here on the short term, more or less has been pushing sideways. Now with this sideways movement, we were unable to break through this prior week high of sitting around 86,000, currently still consolidating sideways underneath this level. This level lines up with a critical downtrend on the daily and weekly. This is going to be the monthly downtrend. The weekly downtrend we have been essentially retesting for the last 4 days, but have been underneath since the beginning of 2025. This downtrend not only marks the trajectory of the price action, but will act as the first trigger point for a potential reversal for the market. We are also seeing the corresponding downtrend being retested on the total altcoin market, and as we can see here on the total market cap, the left chart being the total market cap and the right chart here on the daily being that of the total altcoin market. So we can see the market at the moment is all pushing up to a major level of confluence, a major point of downtrend resistance across all three of these charts, indicating we are at a pivotal moment in the price action. We're going to be discussing this and more in today's video. Let's start on the market data. 24-hour volume down 8% at 224 billion. Liquidations down 30% at 225 million. 118 million coming from longs, 107 million coming from short positions. This near 50% split over here goes and stands a testament to the short-term price action being that of nothing more than just sideways chop and consolidation. Moving over to the DXY, dropping below that 100 level currently on the weekly, and as we can see here on the chart, we are still sitting just underneath that 100 level, that range low. We are expecting future continuations into this 93 level. This may take a year, may take a little bit longer, or even shorter to play out. The direction of which DXY is very much not looking fantastic. If we fail to sustain above this range low, this is going to be our higher time frame consolidation. We had deviation to the range high. Generally, after we see deviation, we see the break of the range low resulting in directional continuations. Again, taking a measured move, which is the depth of the channel, applying to the breakdown point would take us pretty much exactly to that target at 93, which is going to be our macro expectation, our long-term expectations here, provided we remain underneath that prior week high at 104. Moving to the S&P 500 over here, guys, let's take a look at the S&P on the weekly and the daily chart. I'm not entirely sure why that popped up, but let's go ahead and get rid of that. As we can see here, guys, on the daily, the S&P 500 has come up to retest a prior break of structure level. This is going to be a prior area of support, now current area of resistance. For the S&P 500 to continue upwards, we need to break through this point of resistance. Therefore, not only Bitcoin and the altcoin market being that at a major pivotal moment, the S&P 500 is as well at a very important moment, now retesting that break of structure. If we move over to the weekly chart, we can see here on the weekly, let's bring up this weekly chart very quickly. For the S&P 500, we can see that we had a fantastic week in the market with a very, very large rally toward the upside. However, from a weekly perspective, we have not seen a positive momentum shift. Momentum is still negative, and we are still creating these higher lows as the price action continues. So the downtrend is not over for the S&P 500. All we have seen is mean reversion after a very, very large correction. This mean reversion was driven by policy. Again, policy stipulates demand. The 90-day tariff pause resulted and facilitated, most importantly, this short-term rally over the last week for both the S&P 500 and for the assets across cryptocurrency. So without further ado, guys, let's go ahead and jump into the analysis for Bitcoin. We are taking a look at our short-term expectations. What are the key levels? What are the targets? What are the next moves? And then going into detail in each of these three charts, the total market cap, the total altcoin market cap, and the Bitcoin chart, discussing this downtrend, the significance of it, and expectations on the higher time frame. So let's go ahead and jump in. Now, before we do, make sure to sign up to the links down below to BitGet, BitUnix, or BingX. These are our affiliate links down below to the 3 exchanges we trust and use on a daily basis. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll support yourself in your trading journey, and you'll support me making this content. Check it out, it'd be greatly appreciated, and let's jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and jump back into it. We are starting on the weekly, discussing some key technical levels, implications on the macro, and then jumping into these daily downtrends on both the Bitcoin, the total market cap, the altcoin market cap charts, discussing that, and then finishing up on the short term. So currently the weekly chart is looking okay, right? We had a weekly candle close yesterday, which was decent. We saw a bullish engulfing candle in the prior week, and we saw the Gaussian channel upper band and the 50 EMA hold its support. Now, there is also one more thing we have seen during that weekly close. We saw a very critical level on the 2-week chart being the baseline. This orange line is the baseline of the Ichimoku cloud indicator. I've turned everything else off. So you're probably thinking, well, that doesn't look like an Ichimoku cloud indicator. I've just turned everything off except the baseline to make it visible over here, a little bit easier to see. The baseline of the Ichimoku cloud was also able to sustain. Now, the baseline of the Ichimoku cloud actually lines up with the $80,000 region, so it's actually sitting a little bit above that 50 EMA and the Gaussian channel upper band. Now, in 6 days' time, we will get a weekly close and we'll get the 2-week close, and both these levels, the Ichimoku cloud baseline, the 50 EMA, and the Gaussian channel upper band, are all going to be acting as major trigger points for corrections toward the downside if lost. So essentially, Bitcoin has got 6 days to either break this downtrending daily trend line, which has acted as resistance now for about 4 months, and or sustain above the 50 EMA, the Gaussian channel, and the 2-week baseline And if we do not do that, we run the risk of this correction continuing toward the downside. So there is still risk of corrections for Bitcoin. This is not by any means a assured reversal yet. We are seeing some good signs. Good sign number one, of course, was the bounce on the 50 EMA and the Gaussian channel, and of course the baseline. Good sign number two was we had a pretty decent weekly close, but we have to understand the context of that weekly close was embedded basically in the policy shift, which was the pause of the tariffs. If we see any sort of reversion on that, we may see the market correct. So we need to be aware of what is actually driving the price, what is pushing the price in these directions. And again, policy does stipulate demand. So let's talk about this from a weekly perspective. Again, as we know already, these are our trigger points for bearish trend continuations. If we lose these levels on the weekly, if we lose the 50 MA, we lose the Gaussian channel weekly, that is going to be confirmation in our eyes that we're going to see a correction as low as the 200 moving average, which could take us to 55,000. If we look at the macro chart here really quickly, we can see if we look at the baseline, the last time we lost the baseline, after we had a bearish divergence on the macro, right? This is our macro bearish divergence, We lost the baseline after that macro bearish divergence. What did we see? We saw the price action correct into a larger macro downtrend. That may happen again for Bitcoin into that Gaussian channel upper band, which lines up with $55,000 if we see that baseline lost. So there is still a risk of a steeper correction here from a technical perspective. And if we're looking from a structural perspective, there is still a risk of a steeper correction while Bitcoin remains under these two critical levels. So the levels we are discussing that we need to break above for Bitcoin to avoid this downside risk, to escape the potential for this steeper correction, is still going to be that critical level at 89,000. Now the $89,000 level is sitting above this major downtrend. Now the $89,000 level was once around a 3 to 4 month long level of support, and it is now about a 1.5 month long level of resistance. Prior support becomes future resistance. This is a very, very important level structurally and technically, if we break through this level, we would have again facilitated not only a weekly positive momentum shift, but we'll be breaking and establishing, which is most importantly, that these lows that we retested at the 50 MA, at the 2 week, at the Gaussian channel were all bottoms. Until that happens, while we remain under 89,000, the risk that this downtrend, this overall trajectory of price action does continue, remains intact. Until we get confirmation, until we get actual evidence here in the charts that the buyers are showing more strength than what we saw at these levels prior, it is unwise to assume we are just going to go to the moon unless we see dramatic policy shifts or expectations change around future interest rates dramatically over the next few days. So although we can hope for a continuation, I do want the market to rise. Who doesn't want it to rise, right? But we need to be embedded in realism. We need to be objective with our analysis, and we need to look at, where on the chart are these key trigger points that actually alter the probabilities for these movements. So at the moment, we are not particularly sitting here saying we're massively bullish. We are optimistic, but we are very much aware of the risk of further corrections because we have identified that this reversal has not occurred yet. It's looking good, but it has not been enough yet. We need to see more. We need to see the price action show more strength. Otherwise, if we don't, we run the risk of steeper corrections. So that is going to be the higher time frame chart, and that is where this daily trend line comes into play. So the daily trend line now where we are retesting has essentially represented the trajectory of price action over the course of the last 4 months, right? But most importantly, it is a trend line of which we need to break through to see a rally into 89,000, right? So we're only going to retest 89,000 if we break through this trend line, and breaking this trend line will give the market a chance. We'll give Bitcoin a chance. It will show us that it's going for a potential retest of $89,000, which again, as we know, a break of 89,000 facilitates a continuation higher. But this could also be a point of resistance. That is why 89,000 is important, and that is why this trend line is so important. Let's move over to the rest of the charts and come back to the short term in a second. Starting on the weekly chart for the total market cap, we can see we had a breakdown of this uptrend, we had the loss of the RSI, we had everything looking very bearish, and then all of a sudden, we had that 9-day tariff pause. So policy stipulates demand, and it massively altered the perceived systematic risk, pushing the market toward the upside, regardless of the fact that we saw all this weakness. But even with that, we have yet to see a proper reversal occur, right? If we're looking at from a structural and a trend-based perspective, we have not seen prior lower highs taken out. If we draw them out, this is our highs over here, lower highs over here, lower highs over here. We need to start breaking these prior lower highs to be confident that the market will continue upwards. Until then, we have this continued ladder down effect that can just continue until we find levels of support or retest lower levels of liquidity. So at the moment, while we are in this downtrend, and although we have seen a nice rally toward the upside, we are now approaching a very pivotal moment, which is going to be that downtrending diagonal trend line, which we need to break above. I think the overall narrative here for the market, the overall expectations are going to be very split between people. I think a lot of people are expecting either a very large rally or a very large correction. And I think actually in this rare circumstance, I think both parties are going to be right in some degree. And I mean that by whichever direction we move in, I do believe the reaction is going to be quite aggressive. If we do fail to sustain these levels, like I said already, I think we do see an aggressive correction, which could take us to 55,000. That would bring the total market cap very, very low to around 1.9, 1.8 trillion. Whereas if we see this absorption continue, if we see policy continue to develop in a way that favors risk asset growth, we may very well see a situation where all this massive amount of fear that's been developing all of a sudden just turns to mass greed, and we see essentially euphoria into the market, and the market just rallies aggressively. So I think both parties, both people preaching either way has a bit of a case towards them. I think we are more heading toward the downside direction at the moment from a trend-based, from a structural, from a technical perspective. But from an economic perspective, if we do start to see more policy develop in favor of buyers, we may see that scale tilt. So we haven't tilted yet. We are very much still expecting downtrends, but it is potential. You can see the light at the end of the tunnel. We can see how that is shaping up. So we need to be aware of that. And that is the most important thing, guys. It's not about picking a side. It is about being aware of the potential options so that when these things play out, when we get these triggers, when we get confirmation, for example, okay, we're actually going lower, okay, we're breaking these weekly levels, well, then we know what this means, right? Then we are aware of the impact. We have targets, we have invalidations, we know what to expect, and we can actually profit from that move. And just as if we were to go upwards, if we were to break through these levels, we know what to expect then. We know where we're looking for targets. We know where we're looking to have our invalidations, and we're having some rough plan to execute. But if you're just in one of these camps and you're ignoring the other one, you get completely blindsided because you haven't even prepared an escape plan in case it goes against you. So that is why it's always important to prepare for both scenarios. Now let's move over to the altcoin market and then wrap up the video to short-term briefly after. Altcoin market is in a very similar position, right? In fact, it's in an identical position. Some altcoins have done pretty well for the last few days. Some altcoins are up 10% yesterday, even alone, which was good to see. But the overall trajectory of altcoins are unfortunately still down. So we're not expecting to have these, massive long-term swing positions for altcoins. We're not jumping into a heap of swings. Any kind of swing position, any kind of alt position should be a hedge position at the moment, not like we're expecting massive 100% rallies for altcoins. In fact, until this trend line breaks, I wouldn't be expecting altcoins to perform massively well. I think there might be a few that do well, but I think again that is going to be subjective to how some of those coins are developing, of course. But the overall trajectory of the altcoin market cap is downward. And again, until we break that trend line, that is the expectation. So if we break that trend line, we could expect rallies into these highs. We're looking 850 billion, we're looking 900 billion. But if we fail to do that, guys, our targets still remain lower, sitting at around 650 billion for the total altcoin market cap. And we just have to pray we don't lose this level. So if we do, altcoins are going to drop 20, 30, even 40% more from where they currently are sitting. So keep that in the back of your mind. Let's jump to the short-term charts. Again, I'm not loving how Bitcoin is looking, and I said that yesterday, and I'll say again, I am leaning more toward the downside at the moment, particularly because the invalidation is so close, right? If we break through 86,000, we break these high points right here, it is likely we continue through that weekly downtrend and maybe push up to 89K. But until that happens, the potential downside is all of this, if not more, right? So we have more downside potential here than upside potential, but so invalidations are so close. So at the moment, what I'm seeing is I'm seeing some degree of a horizontal channel potentially developing in this range. We may come back down to retest that 200 moving average. And if we do lose these levels at 82,000, I'd expect a steeper correction into 79, potentially into 76. And we know that at 80,000, right over here, we've got the 2-week baseline of the Ichimoku cloud, and we lose that, well, then we're going to potentially lose a 50 EMA and the Gaussian channel, resulting in an even steeper correction. So that is how we're seeing the charts, guys. Thank you for tuning in. Have a fantastic rest of your day. I'll catch you guys all in the next video on Thursday. See you then. Bye.